Due to both technical and structural issues, the price of Bitcoin, the largest cryptocurrency by market capitalization, fell from $21,000 to $15,500 in the course of 4 days in November. When a price is rejected by a resistance region in technical analysis, selling is unavoidable. The market encountered the August resistance but was unable to break past it. The move was also triggered by the presence of other crucial elements. The most significant one is that the head of the US Federal Reserve was pessimistic about the future of the economy, which caused the collapse of both equities and cryptocurrencies. The FTX exchange's bankruptcy filing was the second catalyst. Despite all of these crashes, Bitcoin managed to gain some 8% today. We need to investigate a number of things that build up in the pump. Let's start with the technical aspects. Following the sharp decline in November, Bitcoin gathered for about a week in order to get some traction. After the significant decline, a significant opposition was created, but it was able to overcome it. The Bitcoin bulls were able to benefit from the currency's surge as a result. Price tested the main resistance level that had previously been broken and was now acting as support, and the market accumulated for at least 2 weeks as buyers waited patiently for the best possible price and timing to enter the market. It is far preferable to purchase a fantastic business at a fair price as opposed to a fantastic business at a reasonable price. Warren Buffett. According to technical analysis, the market was building strength for the upcoming leg. As there were additional fundamental drivers in place, the bulls then used the power amassed to drive the market higher. It's helpful to understand fundamental analysis, but which of these factors actually influences the price of Bitcoin? Another reason fueling Bitcoin's growth is the escalating pace of currency inflation in the United States. The US has 2% annual inflation on average, but recent stimulus spending related to the epidemic has dramatically increased the rate of inflation and decreased the purchasing power of the currency. The stimulus measures contributed to a $2.4 trillion increase in the US GDP. Many people are worried about the consequent increase in inflation and accompanying loss of the dollar's purchasing power. As a hedge against this rising inflation, many people have turned away from the dollar and sought solace in assets that historically have maintained their value, or even increased in value. Having $100 today, which can buy one sneaker, and inflation goes to 3%, meaning you can't buy the same sneaker with your $100, but if it was put into assets like Bitcoin or bonds, it will yield interest which can help buy the sneaker, and there may still be change left over. Consumers typically shift their money into scarce or less volatile assets to avoid inflation markets. Bitcoin does well when the US dollar is in fact weakening. Bitcoin's price and the US dollar index have the opposite relationship. It implies that a rise in the price of Bitcoin will occur when the dollar's value falls. Recent data from the US Federal Reserve revealed that the economy is slowing down. Fed Chair Jerome Powell has tended to be dovish in most of his speeches. As a result, the US economy as well as the dollar index, which measures the US's weighted average strength, both slowed down. Both stocks and Bitcoin have experienced enormous gains as a result of this. The Consumer Price Index, CPI, released this week was worse than expected. Imagine boasting to Mayweather that you will defeat him in a one-on-one versus match and you come to the boxing ring injured. He will knock you out with just one blow to your face. This gave Bitcoin bulls more confidence to raise the price of Bitcoin and trigger the current Bitcoin pump. Additionally, there is anticipation that the cryptocurrency ecosystem may be regulated to offer investor protection, which has led to a rise in confidence among cryptocurrency investors in the exchanges. The CEO of FTX's trial is acting as a deterrent to other exchanges who want to deceive their consumers. As a result, the CEO of Binance tweeted that in order to be fair to investors, they must provide proof of reserves, which some claim should also include proof of liabilities in order to increase transparency. Proof of reserves is a good start, but it needs to be coupled with proof of liabilities in order to be useful. Amen Gun Sirer. Please leave any more questions or concerns in the comment box, and we will try to answer them all. Investors will become more confident in the market and trade as there is anticipation that cryptocurrency will be regulated. You need something that will make you money as a trader. Is Bitcoin the way forward for you? Subscribe to the channel for more upcoming crypto updates so you can make a rather informed decision. Until then, take care and see you guys in the next one.